Buddy, this is some. Okay, let's. Okay. Hmm. One trend for cannabis investors to watch for in 2023. Some of Canada's top marijuana producers have been making moves to lessen their exposure to the Canadian pot market. The market's growth rate has been declining in recent years, but the number of licensed producers continues to rise. Okay, the first article is about cannabis companies in Canada, and it's basically about the pot market in Canada. But the thing is that I'm not really interested in pot, so I'll just keep this one and then go over to next one. Uh, okay. Next one is next bull market is coming. Two strong index funds to buy it now and hold forever. Economic turmoil has pulled the S&P 500 into bear market, but history says the next bull market is on its way. The S&P 500 produced a total return of 218% over the past decade, and it has produced a positive return over every 20-year period for the past century. Mm. Produced a positive return. The S&P 500 Value Index produced a total return of 169% over the past decade. It has outperformed the S&P 500 during the current bear market. Mm. These index funds allow investors to buy a slice of great American businesses like Berkshire Hathaway, Amazon, and Microsoft. Okay. Recession fears landed the S&P 500 in a bear market last year. And the broad-based index is still down 17%. That decline has undoubtedly put a dent in many portfolios, and steep losses often lead to irrational decisions. But investors need to focus on the fact every past bear market has ended in a new bull market, and drawdowns brought on by widespread fear have historically been an excellent time to invest. In fact, Warren Buffett has often encouraged investors to be greedy when others are fearful. Here are two perfect index funds to buy and hold forever. Okay. Good option for risk-tolerant investors. Of the Vanguard S&P 500 ETF measures the performance of the S&P 500, a diversified financial index comprising 500 large-cap U.S. stocks. Those equities span all 11 market sectors, ranging from value stocks to growth stocks, and the underlying businesses represent the very heart of the U.S. economy. Vanguard S&P 500 is ETF is the one ETF that I've been looking into. Mm. It's basically like ETF that I would invest in uh, if I don't have any other options. If I don't have any other options left, I would pour uh, mm, my money into it. And here it goes. The top 10 holdings in the Vanguard ETF are detailed below: Apple, Microsoft, Amazon, Alphabet, Berkshire Hathaway, Nvidia. And this goes on: United Health Group, ExxonMobil, Tesla, Johnson and Johnson. Mhm. And here it says, as a staunch believer in American business, Buffett has frequently advised investors to buy an S&P 500 index fund. In fact, he once told CNBC that investors should keep buying through thick and thin. Let's repeat this one more time because it's really important. Okay. Hmm. Buffett has frequently advised investors to buy an S&P 500 index fund. In fact, he once told CNBC that investors should keep buying it through thick and thin, and especially through thin. Their recommendation makes sense. The S&P 500 has recouped its losses from every past bear market. It has produced a positive return over every rolling 20-year period in last century. That means the Vanguard S&P 500 ETF will almost certainly be a profitable investment over the next 2 decades. Okay, now let's get to ChatGPT and ask them about the real difference between the Vanguard S&P 500 ETF and just plain S&P 500, and we'll see how that goes. Okay, S&P 500 ETF. Let's see. Real difference between Vanguard S&P 500 ETF and S&P 500. Okay. Let's see. And while we're waiting for answer, we'll just keep on reading this till we have answers from ChatGPT. Okay. Okay. As a caveat, the Vanguard S&P 500 ETF is heavily weighted toward the technology sector and includes a large number of growth stocks. Those factors occasionally leads to extreme price volatility that makes the ETF a good option for risk-tolerant investors. Okay, that's the exact answer that I was waiting for. So Vanguard ETF mostly includes a large number of growth stock as well as technology focused companies. Okay, I get it. Good option for risk averse investors. Okay, here it is. The Vanguard S&P 500 ETF value measures the performance of the S&P 500 value index, which follows about 400 value stocks in S&P 500. In other words, it tracks the last volatile subset of the broader S&P 500 by omitting the top 100 growth stocks. To that end, the Vanguard S&P 500 value ETF lets investors spread capital across some of the most stalwart American businesses. Okay. Hmm. And let's see about this one. The S&P 500 is a stock market index that measures performance of 500 large cap companies listed on the U.S. stock exchanges. It is widely regarded as a benchmark for the U.S. stock market's performance. It is used as a proxy for the overall health of the U.S. economy. On the other hand, the Vanguard S&P 500 ETF is an exchange-traded fund that tracks the performance of the S&P 500 index. The ETF holds a portfolio of stocks that replicate the index's holdings and seeks to provide investors with returns that correspond to the index's performance. Exchange traded fund that tracks the performance of the S&P 500 index. Okay. Replicate the index's holdings and seeks to provide investors with returns that correspond to the index's performance. S&P 500 is just an index that tracks the performance of a group of companies, while the Vanguard S&P 500 ETF is an investment vehicle that allows investors to invest in the index. By investing in ETF, investors gain exposure to the 500 companies in the index and can benefit from the returns generated by these companies. It doesn't exactly say uh, the answer that I got from ChatGPT doesn't explicitly say about technology sector, whereas it's exactly stated in this article. So I don't know which is the right answer. Okay. Anyway, let's go over to the next article. Okay. Two electronic vehicle stocks billionaires are gradually selling, and one they can't stop buying. Electric vehicles EVs may be one of the fastest growing industries on the planet this decade. Billionaire fund managers aggressively sold shares in two widely held EV stocks during the fourth quarter. Okay, let's see. Oh, let's see. EV stock number one, billionaires are avoiding. Hmm. NIO is the one that billionaires are avoiding too. Okay. Hmm. And why would they avoid? Why would they avoid? That's also important too, because NIO has been mentioned a lot of times. Um, I've been reading a lot of numerous articles, and like there were some people who proposed, not like proposed, like who suggested uh, buying shares of Neo, and I'm like, yes, I want to buy it. But then there's some other people who says you should not buy because it's so risky. It's not like they're making profit right now. Uh, they're in so much debt. Hmm. It's highly likely that in order for them to gain profit, it'd be taking less than a decade or so to make that ends. So it's gonna take forever. I think that's one reason why a lot of investors say it's not a good option for you to buy if you're like unless you're a risk taker. And let's see about that. The other EV stock billionaires have been avoiding, based on 13 out filings, is China-based NEO. Quarter four saw billionaires Jeff Yash of Susquehanna International, James Simmons of Renaissance Technologies, Ray Daly of Bridgewater Associates, and John Overdat and David Segal of Two Sigma Investments all sell a significant number of NEO shares. In order, these billionaires respectively sold around 4.45 million shares, 1.87 million shares, 1.64 million shares, and 0.62 million shares. The Two Sigma sale completely closed out its position in NEO. Okay, here it is. The pessimism surrounding NEO among billionaire investors likely has to do with ongoing supply chain issues and a lack of significant production growth. Although EV deliveries naturally fell off in January due to factory closures tied to Chinese New Year, NEO has been effectively stuck between 10,000 and 15,000 monthly EV deliveries since June 2022. With an assortment of SUVs and sedans at its disposal, investors would like to see NEO meaningfully ramp up its production. Hmm. Okay, the two reasons that he mentions is Neo's location, because since its headquarters is located at China, and like China is really strict in terms of COVID strategy. So export and import is not really smooth, as I say. And the other one is supply chain issues and like a lack of significant production growth. In order for them to grow even more, they gotta produce a lot of vehicles, but then certainly they have a limit um, on what they can produce. Hmm. Here it says that it has been effectively stopped between 10,000 and 15,000 monthly EV deliveries. Okay, so supply chain issues and its position of headquarter. Hmm. But here at the last paragraph it says they still uh hmm, hmm, they still make a lot of intriguing investment for a lot of forms of innovation. So it's we'll see about that. Smart way to generate high margin recurring revenue as well as keep early buyers loyal to the brand. Hmm. Okay. Well, tomorrow could be a huge day for the stock market. U.S. Bureau of Labor Statistics will release February's jobs data tomorrow. This could impact the trajectory of interest rates. Okay. Labor market is important. These Bureau of Labor Statistics release February jobs data. Okay. Next one. One hot growth stashed by hand in office before it sold 49%. According to Wall Street, Twilio delivered a big earnings beat, and the company's bottom line is expected to grow at a terrific pace. The cloud communication specialist has short and long run potential thanks to the market it is operating in. Shares are attractively valued, and investors may want to buy in before it is too late. Twilio's newfound focus on profitability has the potential to send the stock higher. 2022 saw the S&P 500 index lose close to 20% of its value as the Federal Reserve high interest rates in an effort to get outsized inflation under control. 2023 has so far seen the stock market make some real efforts at recovering some of those losses. By the end of the year, don't be surprised to see the market hit new highs if the Fed succeeds in tamping down inflation, stops raising rates. A Reuters poll suggests the market sentiment is that the S&P 500 could end the year at higher levels than where it was at the end of February, even if there is a near-term correction. It is also worth noting that inflation in the U.S. is expected to cool to a range of 2.8% to 3.5% this year, as compared to last year's consumer price index inflation range of 7% to 8.1%. So let's dive into it. Why exactly this author thinks we have to buy shares of Twilio? Red hot pace. Uh, Impressive upside could be in the cards. Let's see. The cloud-based contact center market in which Twilio operates, okay, was worth $17 billion last year. The company's 2022 revenue of $3.83 billion suggests that it had a 22.5% share. The market is expected to generate almost $55 billion in annual revenue in 2027. So Twilio's annual revenue could hit $11 billion if it managed to hold a 20% share of the space. Draw on the company's focus on profitability, and you won't be surprised to see Twilio's achieve the ambitious growth that analysts expect from it. Analysts have a 12-month median price target of $83 in Twilio stock, which points toward a 12% upside from current levels. The street high price target of $110 based on consensus of 29 analysts suggested shares could jump 49% over the next year, which the stock seems capable of delivering considering the discussion above. What's more, if Twilio's top line does hit $11 billion after 5 years, the company's market capitalization could increase to $38.5 billion based on its current price sales ratio of 3.5. That will be nearly twice its current market cap, indicating that this cloud stock could triple investors' money over the next 5 years. Uh, we'll have to see what it is. It doesn't exactly about business model and like what they're good, um, what products they provide, and like the business model and like ethics, and like who the leader is and how they operate and stuff like that. They don't mention it here. It's all about sales and revenue and what is expected, but like it doesn't directly say about their real business. So we'll see about that tomorrow because I got a lot of things to do today. So let's see, and I'll see you guys tomorrow and all the day after tomorrow. Okay, bye bye.